Good morning, everyone. Welcome to the Chart Guys pregame show. It's May 3rd. We're going to get started in just a few minutes, so if you're listening later, feel free to skip ahead. Probably about 2 minutes, so we'll get started then. Everyone else, can't wait to chat with you. All right, good morning, everybody. Here we go. It's a pregame show. Lori is still on vacation, still relaxing. I'm assuming, well, I have no idea what time it is in Hawaii, but regardless, I'm sure she's on a beach. I've never slept on a beach, but it sounds pretty magical. Assuming there are no bugs, but there's always bugs. There's always bugs. Are there bugs? There's got to be bugs. Anyway, feeling winded, I just ran up the stairs because I forgot my very important water. Now we're ready to go. So, how many people do we have today ready to listen in and get some feedback on market expectations? We got a couple of cool scenarios today. So, I see quite a few. Oh, hey, Night Truck. What else have we got? Greg, Lucas, Denise, call me out for my picture. Empower, hey, brother. Adam, Maddie, Jared, Jessica, Melissa, Matthew Burrows, beautiful. And Bobo. Always creepy crawlers. You know what? You think about going on a beautiful place. I went to, where was it? Key West to visit Dan one year. And they had these no-see-em bugs that I had never, ever encountered before in my life. And I have no idea why anyone would ever live in a place that has invisible insects that you can't fight. And they're terrible. No, thank you. Okay. Hey, Brett, Mike. Hey, Mike. Mike KU just joined up the Chart Guys yesterday. Apparently, he's been watching our videos from like 2015 and just finally decided to roll on in and check things out. Zach just asked a quick question. Did yesterday change the outlook of the week for you? Not necessarily. We'll get into that. Well, why don't we get into it right now? Because we only have about half hour or so. So what I'm going to do is I'm going to change up the Lori's process just a little bit. I'm going to talk first about the bear stance and the bull stance for the general market, and then we'll check out some individual tickers, take a look at the dollar, things like that. So there's basically two things that are possible today. And the action that we saw yesterday, particularly right at the end of the day, it gave us some opportunity. So it didn't change the stance overall. We're always looking at longer term trends, trying to determine what the most likely outcome is. And the most likely outcome yesterday was a 4-hour lower high on the chart. So if we go to our, well, we're right here. This is the SPX 500 USD CFD. This is what most people have access to if you're not paying for futures data. And this is the CFD that matches the SPX futures. So it's pretty handy to use. You can just type in SPX 500 USD, and that's the one we use because most people have access to that information. So the most likely outcome for our SPX 500 or SPX futures was a 4-hour lower high because we have been trending to the downside over and over. So we hit a low, we hit a lower high, we hit a low. So the most likely outcome at some point is going to be a lower high, and that generally occurs in the area of our EMA 12 toward 26. So that's what we call a 12-26 downtrend strategy, where we expect lows, we expect lower highs, and we expect those to occur between these two ranges, and they most often do. So yesterday's action, when it occurred, was a little bit unexpected, but we did look for a lower high. So what that does for us is it sets up two scenarios, and those scenarios are a bull mode and a bear mode. So why don't we go check out SPY first of all, because that's generally what people are going to be trading. On the 4-hour time frame, here's our low, here's our 4-hour lower high. Pretty much a double top. We would consider this a double top regardless of the fact that this 0.64 was a little bit higher. And generally, we're looking for continuation to the downside. So continuation is always the expectation when we're looking at these charts. So remember, we got a bear mode and a bull mode. So the bull mode is going to be looking for an hourly trend change. A trend change needs to occur. We have a low, we get a higher high, and then a higher low, which gives us opportunity to change the chart. And if this is a 4-hour time frame, so I'm looking at the hourly, this is our example so far, and that gives us what kind of pattern? It gives us a low, a lower low, match that up to this pattern, and we get what people love to call a head and shoulders. It's a little bit janky. Let's try to draw it out more realistically, perhaps. So if we were to come up, most optimistically get a higher high, then come back down to the 4-hour time frame to get a higher low, that gives us the head and shoulders or inverse head and shoulders pattern, which is a really nice launching point for bulls to be able to move forward into the market today. So until that actually happens, we can't call this a head and shoulders because that's too predictive, and we're not trying to predict anything here. We're trying to create scenarios that we can react to. That's the whole point of technical analysis. Future looking patterns like that don't really benefit us very much. What we can do, however, is go to the hourly time frame, and aggressive bulls are going to be looking for hourly higher low entries. An hourly higher low entry is going to be the bears coming down, unable to push below 405.02, and giving this an hourly higher low at some point during the day. Then from that point, they'll be able to launch to a new high over 450.92 over our pre-market high, again giving us that little pattern that we were just chatting about. So until that actually comes into fruition, it's not too beneficial to be playing only bullish with an aggressive bull mode, because this is only one of two possibilities. So if this is the case, we're going to be looking for that hourly higher low. We're going to be looking for trend changes in strength. We're going to be looking for low bear volume on any possible descent today. And we're going to be looking for primarily yesterday's low to hold. 405.02 is a must hold level for the bulls today. So that's the aggressive bull mode entry. The aggressive bear mode entry is going to be looking for bears to short this range high. So if we had opened below yesterday's level, 450.92, well, we may yet open below that level. That's going to be a key level for the bulls. So aggressive bears are going to be top fishing that level, looking for bulls unable to push through and maintain any sort of volume and strength above that range. If they're unable to do that, then that gives them a really nice area to stop out against, and gives them a nice 4-hour lower high to push against for lower low continuation and overall trend continuation. So right now, that's the most likely outcome, just because that's what we've been doing for, how many days now? A week? So the most likely outcome is continuation. So we have our aggressive bull mode, aggressive bear mode. Let's look at some important levels here. So yesterday's high of day is 415.92. Keep that in mind. Pre-market high right now, 416.64. Low of day, 405.02. And then we can go in here further and look for 15-minute levels if we want to. And that will matter in today's action on the 5-minute time frame as we chop around. So 409.77 stands out, the 410 range, anything in this 410.49. Basically, yeah, we're going to be looking in this range for possible 5-minute support. And the reason we're doing that is because the market has got a very, very short-term memory. You probably don't remember what 5 minutes levels are from 4 or 5 days ago, but all we need to do is look back one day on our chart and we can see 5 minute levels from the previous day. So those do come into play, and there's something that we can watch and benefit from as we're in today's intraday trading. But again, bull mode, looking for aggressive hourly higher lows, holding 410.49 at that range and getting a 5 and 50-minute trend change would be ideal for the bulls, and then being able to break 416.64 or more importantly 450.92 to establish an hourly uptrend. And for the bear side, being unable to break to a new high over 416.64 and then crashing right down below 405.02. So two possible scenarios on the SPX and SPY. Looking at QQQ, we're going to be first looking at the CFD for our NASDAQ, which in this case is going to be NAS 100 USD. We're going to be doing the same thing. So we got our 4-hour downtrend, lower lows, lower highs. We're back up against our EMA 1226. So we have a 4-hour lower high locked. Now what we're going to be looking for is that hourly higher low again and an hourly trend change to the bulls. Same concept, different ticker. We go to our QQQ to see what that looks like. And we mark out some key levels. So let's go to the hourly time frame. What we're going to look for is a high for aggressive bull mode. We're going to look for ideally we want to see a flush. And the reason we want to see a flush as opposed to just an unmitigated bull move out of the gate is we haven't had really good consolidation on the hourly time frame. What we want to see is aggressive bears trying to make a low, but being unable to persevere in that effort. And what that does for us is it shows their hand, they make their attempt, they set their low, and then bulls can move away from that. And that gives us the confidence to say that there is a bull move there. If we go straight down like this, and we come, I don't know, let's say we drop 328 to 300, what that tells me is that the bulls just didn't want to play at all. And they're fully capable of having a complete V-shaped recovery right back up to 330 because they're not trying. If they try and fail, that is far more important for me to use as a defined level from which I can make some trades against. So I'd like to see the bears make an attempt, fail that attempt, set that hourly higher low above 309.65, and then look for a 5 and 50-minute trend change in here, some signs of internal strength. I'd like to see that drop be on relatively strong internals, and then look for a trend change to demarcate that trend up to the bull side for aggressive bulls. You with me so far? Now, for the bear mode, because I got to be equally prepared for both scenarios. In fact, the bear mode is probably the most likely outcome because we have this downtrend. We already have the wind and the river, and all of the momentum is working against the bulls right now. And it's so easy for us to think bullish because a lot of us, if we've been starting to trade or trading in the last 2 years, aside from the last 2-month window, has been completely bull mode. The market has been very forgiving. It is the opposite right now. Bulls have more work to do, and they have more fear and more resistance to chew through. Look at that. We got a lot of work to do here, guys, in the 4-hour time frame. And this is just going to be the beginning. So let's not get too ahead of ourselves. So we have our aggressive bull mode. Aggressive bear mode shows me a bear push much closer to 309.65. So let's get all the way down. Over half would be great. So if we can get under 312.60 yesterday's, or I should say, was that Friday's low of day? And then that opens up the door for a lower high, then an hourly trend change, and 4-hour downtrend confirmation. So that's probably the most likely outcome. So if you are in bear mode on QQQ today, you're going to be top fishing. Yesterday's resistance should be open under it. And you'll be also top fishing yesterday's high of day and pre-market high if we get below and come back up against that level. There is one other scenario. Well, there's actually infinite scenarios. That's the difficulty, isn't it? One other scenario is the bulls just go like snot. And then we're going to be looking for continuation patterns. We're going to be looking for short-term exhaustion and intraday stair-step patterns, which are essentially, I know I'm realizing I'm using a lot of our vernacular from inside the community. By the way, we have got a community of people who like to do this stuff. If you're watching this, you probably like charts as much as I do, which means you're crazy, and I want to be friends with you. But check out chartguys.com. We've got literally 1,000+ people who like to watch and talk about and trade charts. And trading does not need to be lonely. You can have a lot of fun. You can talk about charts all day. Imagine going to a party and you're not the most boring person there talking about the SPX futures chart. In fact, you're surrounded by people who are interested in what you have to say. That's what's happened to the chart, guys. Okay, so that's my spiel today. And I've completely, of course, lost. Oh, yeah, continuation, stair-step patterns. So a stair-step pattern is essentially when we get a great runaway. And here's an example, actually, right here. So you can also call it a waterfall. Imagine this is in the 5-minute time frame. The price is just dropping, dropping, dropping. In fact, we had a beautiful one on SPY a few days ago. Where was that? On Thursday? Yeah, right here. Okay, so 2-minute time frame on SPY on April 28th. We had a complete runaway. Like the bots got turned on and it was a little bit bonkers. Luckily, price action and some internals got us a little bit of a heads up on this. Not a heads up, but certainly showed us strength. There is really maybe 1 or 2 actual quote unquote heads ups that you can get in trading. And those are primarily market internals. Everything else is a lagging indicator. So we saw our price break and we use our internals to show us that the strength was valid and the volume was valid. Anyway, we get a stair step. So a stair step pattern is consecutive higher lows on every candlestick all the way up until it changes and then you short. So we use that as an exit signal for this crazy runaway. And generally, when you get a stair step pattern and you stop setting those higher lows, it tells you that the narrative has changed and the rationale for extreme aggressive bull or bear push, whatever caused that, doesn't exist anymore. So it opens the door for consolidation opportunities. We did see just the briefest a bit of consolidation opportunities. And I think I posted a video on that in the community as well. Okay, back to business because we're running out of time. Something I do all the time here. Let's go on wild tangents. So we've set up our bull mode and our bear mode. Makes you really appreciate Lori's very excellently organized approach to the pregame show, hey? 25 minutes of jam-packed information and education, and here I am rambling on about stair-step patterns. If you like this sort of rambling, we do it 3 times a day in the chart, guys, and you can ask us a lot of questions. I see some requests for tickers. I saw one for Nike. That's also what we do. So if you want to trade Nike and you're setting up for the morning, you can do a ticker request. We can talk about it live in our video stream. And if you're in the trade and you're looking for ad hoc feedback in the middle of the day, you can get it from the chart guys. You can get it from Dan, myself, Lamont, Dins, Lori, or 1,000 other people. If you're interested in that, that's what we do. Okay, back to business. We got our bull mode and our bear mode set up for SPX and QQQ, and I think those are the most important things right now. What I do want to chat about as well is something that we looked at yesterday, which is going to be our DXY chart. So here's an example of how coming up with most likely scenarios can be really beneficial for you. So in our video yesterday, you can go back and look at the stream. I think they're all available. We looked at this DXY chart on the daily time frame. We said, you know what? We have had a stair-step pattern. Okay, here's a great example. We've had a stair-step pattern. We've lost consecutive higher lows. So what that means is the rationale for this push has changed. We cannot expect to rely on that strength to continue and can make new highs. Something shifted. So a shift from straight up generally means consolidation. So 4-hour time frame yesterday, we saw our high, we saw our low. And we said, based on this strength, based on the fact that we have higher low support in the 4-hour time frame and the hourly higher low here, the most likely outcome is going to be a 4-hour lower high under 103.92 because we want to see the formation of a bull flag. A formation of a bull flag requires us, for a textbook scenario, to have a lower high under the high, see an hourly trend change, which we will be able to see in here, and then see a drop. So this drop ideally takes us below 102.818. Yep. And then we're going to look for an hourly trend change here to give us a bull flag structure. So a lot of speculation. If you were looking for a longer entry, you're going to look for 102 to break, and then an hourly trend change back to the bulls, which is going to give you a small risk window to stop out against for new lows. So 103.98. Let's look at the trend change in here. Hourly time frame. Here's our hourly high or low. We can look at this as an hourly high or low. Look at another one. And then we lose that, set an hourly low or high, drop below 103.40, which confirms our 4-hour shift, locking in the potential, well, the expanding potential for a 4-hour bull flag. It's kind of cool, huh? All right, what else can we take a look at for you guys? Let's take a look at the RTY, because I know some of you guys are looking at this as well. What the heck was that? We must have been looking at the big old weekly time frame. I have no idea. I don't remember drawing that. Daily time frame. How are we doing here? We're doing okay. We had a big drop. Big weekly bear flag. So the continuation, I'm going to be looking for 4-hour trends. When I see a green candle, red candle, a little bit of a move, we can see, like, just imagining and squinting our eyes, we can see that there is a trend in here. And this trend looks like this, right? So we go to our 4-hour time frame, and that sort of marks it out. A little bit ugly. I don't know how the market moves backwards. If I could figure out how to go back in time, things would be different. I'd have a bigger office. 4-hour downtrend clearly in place. Looking again, 4-hour lower high and lower lows is the expectation. Aggressive bulls are going to be fishing for hourly higher low over our 1834.5 level, and aggressive bears are going to be looking for the lack of ability to break our 1891 on this little push. Lower high, lower low, so an hourly downtrend puts them on the trajectory to break that 1834.5 level. Okay. Matthew loves watching price action all day. No one wants to hear about it. Yeah. It's difficult. One of my difficulties is when people ask me what I do for a living. And generally, if I'm there with my wife, I just turn to her because I love to watch her squirm through that question. And she has turned it on she's turned it on me and just says, tells everyone that I'm a YouTube star or an influencer, which drives me bananas because that I am not. And it opens the door to way more questions than a complicated securities analyst would, because no one wants to hear about that business. Hey, Grigzorbs Boleski, sorry about that. Yeah, I can probably look at PayPal. All right, so I want to make sure that I'm going to cover anything important for us heading into the day. I will note Hang Seng had a really good session yesterday, so that pushed really, really high, opening. Well, I want to say opening the door, but being optimistic. And that, maybe helps us a little bit. Let's see the eDow mini futures. We don't need to chat about that. Let's talk about Bitcoin. Bitcoin, for you Bitcoin lovers, and I know there are many of you out there. I am one of them, I assure you. Actually, don't tell anyone, but I like Monero. Bitcoin has got this big wedge it's fighting against right now. So it is now broken out of this wedge. We haven't effectively and confidently closed above it. We could still just pull back. And if we did pull back and set a new low, we would just adjust our chart a little bit because our patterns are never predictive, right? They're responsive. We're always adapting them. But we have talked about this yesterday. There's no denying we have a converging range here that we can utilize. So if we are going to see a big breakout out of this pattern, and we are addressing it and approaching it in the most effective way possible, which is sideways right into it. We never want to see a pattern, especially a bull reversal pattern. We never want to see us come straight off the lows and try to break that, because using all of this range takes away the potential for follow through. Right? We have to spend effort to get there. We don't want to spend effort to get to resistance. We want to walk into resistance and then break out. So there's a lot of potential behind this pattern. We need to see a confident 4-hour break and probably over that. You know what? I would think I would need us to get over this 39,000 before I'm really happy that we've got a trend change here. Attic says he's a tradesman when people ask. Yeah. I think that also invites a lot of questions. I'd be very curious to see what you would do if you told me you're a tradesman. It probably would bother you more because I know nothing about trades and I'm incredibly interested because I'm not a handyman. It's at the point where I have to call my father-in-law for most basic advice, and it's just sad. Just say there's a lot of drywall holes that I don't know how to fix. A lot of nail holes. And it just looks sad. Looks sad when I try to do it. Okay. Hey man, if you need a chart run, I'm your guy. All right, so we've got our Bitcoin we've chatted about. You know what else we can take a look at? Gold futures, commodities. So gold has not been having a lot of fun. On the gold chart, we got our weekly high. Awesome. We had a weekly lower high. Okay, that's a little bit of a concern. So this is a great example of when we give the opposite side an opportunity and they fail to follow through. So we have our high, we got our low. That's what we expect to see. Now we want the bulls to come up and push above the 22,078 level, but they failed to do that. And the failure then to capitalize on that opportunity indicates their weakness. They've shown their hand, and their hand is weak. Their moves are weak. We see the bears come down and push below the key support level. So now the trend has changed. We have a low, we have a lower high, lower low. I'm losing my voice here. I don't know how Lori does this every day. So with gold, now in a weekly downtrend, we're going to be looking for the daily trend to follow that. So we got our daily high, we got our daily low. Now we have set the low. We have the bulls have some opportunity here to look for a daily lower high against our EMA 12 and a drop. What do we need to see to do that? We need to see an hourly trend change at a minimum. Whoa. Ah, sneaky buttons down there. And for an hourly trend change, we need to see at this point a break over 1867.2 and an hourly higher low. We're still setting lower lows and lower highs, so bears are in control. We're against our EMA 26, which is a beautiful place for the bears to turn. So we do the same thing in inverse. This is a beauty of price action. So let's walk through that again, because there are so many counter trends here, which makes this kind of a messy chart. So we have a weekly downtrend, lower highs, lower lows. Daily downtrend, lower highs, lower lows. 4-hour downtrend, lower highs, lower lows. This didn't constitute a trend change because why? We got a higher high, so lower low, higher high, did not get a higher low. Trend is still bearish. So we're looking for another lower high, lower low. Hourly time frame, lower high, lower low. So we're bearish all the way down, and I was incorrect. There's no contrast, there's no conflict. Bears are in complete control of this chart. You can learn anything watching YouTube. Yeah, you can. Right now I'm learning how to make particularly ethnic northeastern Chinese food dishes, which I have no business trying to make. I made garlic chili dipping noodles the other day, and it was great. It's really cool. I love YouTube for that. Okay, what else do we got? I think we'll do some ticker requests. The chart guy is going to be live. Dan's going to be live in about 5 minutes, but I did see a couple tickers, so I'm going to try and get through some of those. Are there any particular questions you guys have that I have not answered with respect to today's expectations for the greater market? Let me know. I'll see if I can answer those. That's really my goal today, is to get us ready for what the market is going to do in general. And we'll take one quick peek back at the general market before we move on today. Let's see. I got the Nike request. Did I miss anything up there? The back burner indicator. The back burner indicator, good question. That is something that we came up with in the chart, guys. We're trying to create more indicators. And one of the gripes I have with this whole industry is selling alerts and, you know, buy signals and sell signals. I never liked when people tell you to buy something. That's not what we do. Try to teach you how to trade, right? That's the whole point of the chart, guys. So what we did was to try to create indicators that reflect the type of trading that we do. So it's not a buy or sell indicator. It is an indicator that highlights the type of market condition that we really like to trade in, which is going to be called, in this case, a back burner, which is an extreme overbought condition. So let's imagine we have, let's say QQQ is just ripping up on the daily time frame, and we have our RSI is quite hot. We have seen unmitigated bullish strength, and you know what? For some reason, there's a quick sell-off. So we have our hourly time frame just dips back down, catches everyone completely unawares, and it's the first time that it happened in a while. That's a back burner. There's a panic sell for no reason in light of complete strength and uptrend. Backburner kicks off. We look at it and we say, holy smokes, this is an oversold opportunity. Let's get it. We look for the 2 5-minute trend change. We stop out at new lows and we rip. So that is a very common occurrence, and we created an indicator for that. And I leave it on my charts because it also serves as a overbought and oversold indicator. So this is our 30 RSI line. And if it's active, which I haven't seen on any charts today, it highlights and lets you know that we're looking for backburner plays on particular stocks. We may have one, CGC, because it has been pretty hot lately. It might be active on the 5 and 15, maybe not. No, go on. We're consolidating too much. So any trend like this is consolidation. It chills out our RSI levels. So we're looking for big breakouts. We're not active there. Anyway, that's the answer. SLV daily oversold. Okay, so that's a more specific question. I like that. And we'll do those three. Anyone else, if you're interested in getting more feedback, I know we talk about XLE all the time, every morning, and Tesla is always in high rotation inside the Chart Guys. If you want to check out Chart Guys, we got a pretty, I think, a reasonable membership. I saw a group. Someone sent me the other day. They were charging $5,000 a year to be in this community, and I thought that was nuts. Either we're vastly underpricing ourselves, or they're crazy. I'm leaning toward the latter. Anyway, let's take a look at Nike. Oh yeah, if you want to check out Chart Guys, and you want to dip your toes in, send me an email. Maybe I can get you a discount code. support@chartguys.com. Just say Jason was running his mouth on the pregame show, said some stuff he shouldn't say, and one of those being some discount codes. Check out Chart Guys. Okay, yeah, Empower, I know. Don't want to call you out. Okay. Nike. So Nike on the daily time frame. When our EMAs are moving together like this, it means we don't really have a trend. We can see that we have a price action trend, but overall, we're really establishing sort of a sideways range. So if we're looking for long positions in the weekly time frame, we need to get over that range. And right now, we're trying to determine what our bottom of a range is. Technically, we're in a daily downtrend and we're in a 4-hour downtrend. So I can see rejection from our daily EMA 12. Go to our 4-hour time frame. Here's our lower high. Here's an hourly high or low. So again, clustering together, there is no trend that we can really utilize for our Nike. So what do I need to see to be more confident in that? I need to break over 128.45, which gives me a low, lower low, higher low, gives bulls control up to the top of that range. So if we are to see bulls over 128.45, they don't really have any resistance until they get back up to that 139.75. And I always imagine things like bumper bowling. If I can get my bowling ball inside these bumpers, there's nothing to stop it from going to this, then bumping back to this, and bumping back to this. And it is market interception, it is new data, it is geopolitical events that deviate our bumper bull from just continuing and doing its thing. So in the absence of all of that, and in the absence of outside influence, if we can get over 128.45, we'll cruise toward the range highs, and then we'll be looking for reactive trades there. BYPL. It's all right. People confuse Dan and I. I don't know how. He's got long, luxurious hair. I've got memories of it, having hair once. But he does like 99.9% of the market videos. Okay. Daniel, send me a message. I'll give you a half price monthly membership. You can check it out. And you know what? If you make your profits enough to justify it, or you get the education that you need that justifies the membership at that point, you can make a decision. But yeah, send me a message. Just dip your toes in. You don't need to do the annual. You can just try it for a month, and I'm sure you will get a lot of information that you find useful. And you know what? If you're only there for a month and you pull out a month of education and watch all the educational videos and walk away a better trader, I'm happy with that too. That's why we're here. PayPal, daily time frame. Got a low. Oh man, I almost thought the market was open. We got our low with lower high. So this strong day is kind of interesting. So we're going to have to look at. We have so much work to do to change the daily trend. So that's not really an option at this point. On the weekly time frame, we're looking for a weekly lower high under our 109.19. So that becomes a more likely situation. So we look at our first area of resistance up here. And if we see a low, a high, lower low, we now open the door for a lower high. 109.19 is a target. Daily time frame, we have not changed the daily trend. And in fact, we can probably go all the way up here before seeing that move, because when we get the trend, we need to see like a big drop. If we come up and then come back down and then come back up, that's a daily high or low. This is just 4-hour action. So we have relatively little resistance. We're going to call this one our new target, 104.86, because that's going to be our first, we're bumper bowling. That's our first obstacle inside. Imagine like a rock on our bowling alley floor, or someone who threw the bowling ball and made a big dent. May have been me. 104.86. So daily time frame, I do see a 4-hour trend change here. So 4-hour downtrend, higher lows, bulls over 94.51, target 104.86. Okay, so we've got a back burner indicator kicked off on PayPal, which means PayPal has been overwhelmingly bearish. So the daily time frame has cruised to the downside, and we go to the 4-hour. The bears are so aggressive that a short-term pop up to 99.15 is something that's noteworthy and definitely should be considered to be shorted against. Not necessarily a sell signal, but a strategy that you can look at and say, do the conditions favor a bear entry? And if you look at this and you've arrived at 99.15 and the overall market is looking bearish for downside continuation, there's no help for PayPal, then that becomes a more approachable short entry as opposed to something else who is just waffling around in the middle of a range. So barring that, I'd be looking for a break over 94.51. I'd be looking for consolidation against that area high, so that overbought condition. That'd be RSI 70 on the 4-hour time frame. So I'd be looking for 94.51 to break. I'd be looking for a 4-hour high or low to cool off my RSI, and then a move up to range highs 104.86. That's one of many possible scenarios, but if I'm bullish, that's how I'm playing that. And the last one, SLV, because I got to go get back in ready for the trading day here. Silver away. Daily oversold. 2034 is our daily and weekly support level. 2042 is our daily low. So bulls want to break yesterday's high today in order to try and get a daily bounce going, because we are oversold. We saw some good start yesterday. Best thing for us to do is going to be open below our 2102 level, crack it to the upside, and ride the 5-minute time frame up there. Bulls are going to have upside momentum right now. Hourly time frame, oh, we're just below that. Perfect. So best thing for me would be a quick flush, get a big confident hourly high or low, play the 2-minute to the upside if you want to be bullish, and get an hourly move over 2102 for daily continuation from yesterday's big daily oversold bounce. Target for a daily oversold bounce is quite aggressive up here. Our first EMA is 2194. It likely would come down probably over a couple of days to the 2143 range. And hourly time frame is also going to move down, and back burner is active on that one too. So we're looking for that bounce condition, and that's it right now. Just a bounce, then a return to bears. Okay, I got to get ready for the pre-market show inside the Chart Guys community. Again, I invite you to come check things out. You don't have to stick around. Come get a little bit of education, get a little discount code if you want. Email in. I'm happy to work with you. Support chartguys.com. We just love to teach people this stuff. So I hope to talk to some of you soon, and I'll be back tomorrow for pregame, and then I think Dan's going to do Thursday and Friday, so that'll be fun.